I want to start first of all with the breweries. The breweries, of course, a big attraction to many foreign investors, the likes of Nigerian breweries and Guinness. I know you put out a note recently looking at the market in Nigeria and in East Africa. Give us your thoughts about the opportunities you are seeing in this market.
Well, on the Nigerian market, we're still quite bullish. As you said in the note we published, we did take another look at the opportunity in Nigeria and also East Africa, and what we found is that the opportunity is still relatively robust. Two key opportunities we highlighted in that note were: one, opportunity for growth in the consumption of mainstream and premium beer, and also opportunity in the growth of affordable and the branded traditional segment. Now, for most of the players, Guinness, Nigerian breweries, they tend to focus more on the premium and mainstream segment, although Guinness at the moment is trying to make a crossover into the affordable segment of the market. But just to reiterate again, we still find the sector to be a pretty attractive one based on the outlook for volume growth. We're looking for about roughly 11 million hectoliters of additional beer consumption over the next 5 years to 2017.
And give me a sense of your thoughts on how the competition we're having in South Africa and similar competitions impact sales for the brewers. Of course, I imagine there are a lot of promotions at this time, a lot of viewers, a lot of people watching the games, and of course a lot more drinking going on. So your thoughts on the impact of competitions like this on sales?
It's quite typical for you to have increased sales during periods of competition, particularly where the country, obviously the hosting country. So a good example was the last World Cup in South Africa, where having grown at a relatively slower pace, that game basically boosted growth in South Africa, and as you've seen, growth has basically gone back to relatively more moderate levels. Now, in the case of Nigeria, we do expect to see an uptick, obviously, in the volumes on the back of the ongoing games, but nothing very noticeable, I would say. I think it's usually much more stronger when you're the hosting country. We don't also have strong evidence to obviously suggest that you should have much more robust volume levels. But obviously, you had companies like Guinness, strongly behind, the African Cup of Nations. So I don't expect to see growth in the names of Guinness probably in the current quarter. But I think in the quarter leading up to the games, I think there was obviously quite a big drive behind marketing to boost their volumes.
Okay, let's move on to other consumer names. I want to start with Flour Mills. Your thoughts on that counter? Clearly, it's one of the top leaders. It's one of the major companies in its, if you like, I don't even know if we can call it core business again. That's the milling business. But your thoughts on that counter in particular?
Well, Flour Mills is the third largest flour mill in Nigeria. We think it's a very small player, especially if you're comparing it with the likes of flour mills or probably even Dangote flour. And so for that reason, we're probably more bullish on the names I mentioned earlier, flour mills and Dangote flour. We think that the flour milling business is a scale business. And having said that, I think that the management of Honeywell Flour Mill realized that and are obviously looking to scale that up. They just recently doubled their capacity, and we expect them to drive output over the next 3 to 4 years. But it's obviously a work in progress.
If I wanted exposure to that business, so would you say Honeywell Flour is the best opportunity there, given where valuations are right now?
It's obviously looking interesting from a valuation standpoint, but I just wouldn't push the buy button just yet. Yeah.
Okay, let's move on to some of the multinationals. So we have Nestle, we have Unilever. Many people say that their valuations are stretched. We continue to see strong interest, especially from the foreign investors in these counters. Your thoughts on how they are likely to perform this year?
I think that there's a very, very strong technical sort of support for those names. If you look at key indicators like the VIX index or the emerging market sort of points us to risk perception in the region, I think that they're trading at relatively historic levels. This is sort of prior to the Lehman bust levels, and so I think that's quite encouraging, and it will continue to push trading in markets like Nigeria or the rest of Africa, and obviously it makes investors generally bullish on the story. A lot of people tend to take a much longer term sort of view on names like you just mentioned, and there are names that even though we tend to view them as relatively expensive on a one-year view. I think that they could definitely grow into those valuations over the next 2-3 years.
What about PZ Cousins? There's a lot of noise about the impact of insecurity across the country on their sales. It grabbed the headlines last year. Your thoughts on how well they're likely to do this year?
I think it's going to do well at the sort of headline level. I mean, as you probably know, it's coming from a significantly low base, so there's obviously a lot of ground for them to cover. This obviously is in reaction to a significant ease in its input costs. But in terms of top-line growth, I think that it will remain relatively weak. In fact, in the first quarter of the financial year 13, volumes were down, but we do expect some recovery going into their peak season, which is typically between November to about May in every year. So I think that it will do slightly better from a top-line basis, but I think what we would like to see in PZ is a much more aggressive sort of management approach to the market. I think that in a very competitive market like Nigeria, you obviously need a much more aggressive posture, both to your route to market and also in terms of building capacity.
All right, the NSE index is up over 10% this year. Clearly, one of the things moving it higher, especially if we look at Wednesday's performance, was Dangote Cement. And can we just end on that note? I know you keep an eye on that sector a little bit as well. Dangote Cement is now at 115 naira. Do you think it could continue to move higher from where it is now?
We've always been positive on Dangote Cement for some time now, and it's not really surprising that it's happening at the moment. It's sort of overdue, but I think that what's simply happening is the general bullish sentiment is starting to catch up with the stock. I think from an earnings standpoint, I think that the company is doing relatively well. The backdrop here, though, is that there's been a lot of noise in the press about how cement prices will probably come down, or whether they're not coming down.
So your thoughts on that point?
Likely a new government policy to change the sector. My view really is that with respect to the debate about importation of cement in Nigeria, I mean the amount that we're talking about is very little, probably about 5% of total cement consumed, and as such, Dangote Cement and Lafarge Wapco, I think, can continue to do relatively well, despite Ibeto Cement sort of importing that level. There's obviously a clear reason why they've been asked to continue to import cement, and I think that it only be a matter of time before Nigeria obviously stops importing cement. I'm not really clear on sort of the timing, but I'm sure over the next 2 years will be a pretty decent timeline.